Hi, folks. Wanted to touch base after a confusing scoreboard today in the markets. So I'll start by saying the there were breakouts and breakdowns. So the bulls won because the Dow broke out, and the small caps, a basket of 2,000 stocks, did very well. The S&P was doing very well until it closed somewhat down, but the Nasdaq got shellacked, down almost 3%. So painful trade there for the mega cap tech stocks. So the bulls won because of their progress in the other two indices. The bulls lost because of their decimation of the Nasdaq. The bears won because of that same decimation of the Nasdaq. The bears lost because themselves failed to make any progress. So the VXX and the VIX made lower lows, especially the VXX. They couldn't even come to half of the danger that they posed on Friday. So everybody wins, everybody loses. Extremely confusing. How do we proceed? First of all, we lick our wounds from the long trades of, say, Nvidia's, for example, down 7% out of nowhere, Apple down 4% out of nowhere and for no reason. So clearly there's something going on that's above our pay grade, my pay grade at least, I would admit it. So somebody might be liquidating to cover losses somewhere else. I cannot believe these idiots are still shorting stuff like GME maybe. I don't know. It can't be, but I guess it is. So what they do is they have to liquidate good things in order to pay for their mistakes and bad things. That's what causes panic out of nowhere. There was no headline that I know of. I'm not watching news, but I would have heard from everybody on it yet. So let me recap, see if I can touch base, link to what is going on here. We're looking at the S&P, the SPY, 2-hour chart, versus my expectations. First of all, from the weekend recap, I said I'm still looking for control. So far, the bulls have control on the longer, higher time frame. So a daily chart, they're still in control. It's up, up, and away. On this level, they're still in control. We still have higher lows, higher highs. Shorter term, we have lower highs, and that's the line I'm seeing. I'm tracking. And in fact, the morning note looked like this. So this yellow line versus the white arrow. And I did similar one last week, and I'll go to it in a little bit if I have time. So first stent is to go up. Second is to drop. They went up and they dropped. They dropped a little bit more than I wanted, but not a game changer yet. So tomorrow they can continue making progress. The idea is the bears want to continue this. The bulls want to break through this. So, but first job for the bulls is to hold your floor. And now the floor is down here from the action last week. So job number one, don't lose the action from last week, because then you open this scenario. Job number one, before the job number one, is not to make a lower low than today or here, which was Friday, part of the last rally, which is normal, by the way. The Friday rally from the bottom was too hard, and they just gave back half of it after today's pop. So far, nothing game-changing. So we have an ascending trend meeting a descending trend, and they're fighting it out, and this battle is still ongoing. The white arrow, sneeze, versus the downside yellow trend line. So outcome, mini battle will be right here at 388. I'm going to call it round. If the bulls can get above it, that's a mini win. On to the next battle would be somewhere here. But time matters, so it's going to shift that way as just time passes. But the battle is still ongoing. I'm not going to visit the Dow because it just popped. It broke out. I'm not going to visit the small caps because they're doing what they need to do. Let me see here. I'll give you a big picture of both. Excuse me. So that's the Dow. Broke out last couple of weeks. Today, higher high. And they're right here. That's good progress. Small caps, they're still battling with higher lows, trying to break out of this shorter term lower highs, just like the S&P. So now on to the problem child, which is the Nasdaq. So in my recap video, I said the same thing. The Nasdaq is fighting it out against this lower high trend that the bears are trying to establish. Onus on them to prove they can do it. And whoops, I can't do a straight line. It was a sharp line down. I said the bulls' jobs number one is not to lose this, right? And I said they're going to battle it out until they come to a point, break out or break down. Well, today they battled it out, but not too long. They immediately dropped their pants and went to the floor. How far down? So this looks like a head and shoulders. Technically, the technicians will tell you it should fall about that much, which means there's still more pain ahead. I look left and I see reasons why it shouldn't go there. And if it does, it'll make a heck of an opportunity. And to do that, I'm going to use one stock, which is Apple. But first, I want to tell you the expectations. This box, yesterday, Friday, was the box where the market makers thought the whole week should be inside. So by next Friday, it should have stayed in here. Not an absolute rule, but this is a good guide. They fall out of it sometimes, but they come back. So let me go to Apple to show you the downside risk from in the Nasdaq, because today's Nasdaq trade was down minus 2.8. Apple was 0.6 of it. So if you bring Apple to 0, it would have been down 2.2%. So Apple is a big beast, and it influences all indices. So this is Apple daily chart. Remember, it's split 441 here somewhere, right there. They announced it here. The way this happened here, this breakout, was complete bullcrap. An absolute shameful way of breaking out. Unfortunately, it leaves a great rally hanging on a very thin pole with holes in it. So it makes the whole thing vulnerable just because of the freaking CNBC, the way they did it. So Apple came into $400 before the split and failed within pennies. Failed again within pennies. Failed again within pennies, and then dropped. That is telling everybody, I am not ready to break above 400. And then they meandered to come back, normal, good, healthy way to come back. And then the BS announcement, oh, we're going to split it 4-for-1 after Tesla. And then CNBC had a special about how you should chase stocks that split. And then this. Complete, just bad way of building a rally on a pole with holes in it. So not every gap fills, meaning it's not necessary to fill this gap. It's just a seed of doubt and something for the machines to chase. Now, if Apple indeed triggered a head and shoulders right here, then it's going much, much lower. Against that, I tell you that it should have a lot of support right here just from the volume profile. That orange line I didn't draw. That's automatic line tells me 116 is where they love it. They're going to buy it and sell the heck out of it. So it's support. 112, also strong, proven bounce. 108, similar, even stronger proven bounce. 103, even stronger proven bounce. If it gets to 103, I will go long Apple even more. I'm still short the 117.5. I will take the shares if they give them to me. My trade, I believe, is out to April. And I haven't done anything to it. So that's the statement on the Nasdaq. It's going to mimic what goes on here. So out of the blue, 4% down on Apple. Look at NVIDIA. Out of the blue, 4% on NVIDIA. So these are great stocks. And it makes a good deal here. But I can't tell you that this is the bottom because I don't know anything new. We're still missing this piece of the puzzle. Who's selling and why, and when are they going to be done? 432 is a great pivot point. But so was 467. So what did I do today? I just added a nibble to something I've shared before. 480, 475 April credit put spread in NVIDIA now pays 250, or at least it did sometime during the day. So I nibbled. So if I had 10 contracts already, I would have added one just to relieve the itch of doing anything because I don't have any information. Or if I have enough and 10 was the original risk I wanted to take, I don't add anything. I just see what the heck is going on. That's NVIDIA. So let me tell you why I wouldn't add with force. Because look at AMD, which fell a little bit less. You say, oh, okay, holding levels, great. Yes, but therein lies the danger. And remember the poles with holes? So that rhymes. First of all, this is solid base. This is solid base. This is the test of said solid base. Now, this could be the inverse cup and handle bearish pattern. It could have this much downside in it, but we just said this is a solid base. Under normal circumstances, I would say yes, I'm comfortable being long AMD or catching the falling knife and saying that this is close to a bottom. Guess why I don't? Because I have a pole with a whole bunch of holes in it. Don't remember what the heck was it around this earnings or what caused this. What is this? You cannot build a good building on one pole on one side with a whole bunch of holes in it. It's just not good. One scary moment and this will go whoosh, and it will be a quick one, and then here I would sell a lot of puts after the fact if that happens. So what can trigger this? Don't know what headlines will trigger this, but I can tell you on the bounce, if we get a bounce tomorrow, there's going to be sellers lurking everywhere. So if that's the case and they come back down and test it, check this out. This one nasty head and shoulders. They can do this twice because they have two shoulders really, and then one head and one shoulder and then two shoulders. The bottom line is lose this after one bounce, you're going down. So I shouldn't be that comfortable saying I'm certain. Sorry about that. I am certain that this is the bottom. I am not. I don't. It's a falling knife. We don't know what's going to hold up. Technically, I look left. Yes, it's a good place to hold up. It just held up. It just held up. This is another test. But boy, that was a violent one for no reason. So clearly, I need more information. This big gap, is that what they want? This little gap, is that what they want? So can't have a lot of conviction. I did last year, a year ago, when this was happening. But we were down here. So I shared the $22 puts and the $20 puts when people were selling everything. That makes sense. Up here, I don't know. I don't have the same comfort by selling $50 puts, $60 puts. I wouldn't mind owning it at 60, but I don't know if I'm jumping the gun by a few hours and then it's going to make double the difference just a few hours later. So patience pays, especially if I'm already long anything Nasdaq, especially if I'm long the Nasdaq and I'm in pain in it. I don't know anything new. I knew that it was going to happen. It could happen, and it did, but I don't know anything new, so I should temper my enthusiasm with expecting a bounce. That's all I have to say. The indices, the bulls are still in charge of the indices. I know it's no consolation, but it's up to the bears to break it, and so far they have failed. They're trying to by creating more habits like these. They did it here before, and then they bounce right back. They did it here before, and they bounce right back. So we're still ping-ponging inside a bullish pattern. Nothing has changed. 2 trillion is coming. It's going to hit the market soon. 1,400 and then an extra 300 per person that files unemployment through September. It's hard to short that much cash. I know you're saying stimulus is because people need it. I don't think the people need it. A lot of people may need it, but more people don't need it. But it's going to be cash because they keep reporting records, deposits in the banks, and record low debt to income ratio, debt ratios on the consumer side. That's because a lot of them are not paying rent, because legally not paying rent because they have a forbearance program going, and on top of it they're getting aid from so the problem is just getting kicked down the road. But for now there's going to be a lot of cash in the system. That's my speculation. So I don't fight the trend, and the trend is up. So I have to pick my battles as to where I catch the falling knife depends on my personal situation. So if I'm already deep in the Nasdaq, I don't add until I get more answers. This is the QQQ daily chart. It has seen pain like this before, and it didn't end the game, but it's pain nonetheless. Last week's low, the Friday low is still surviving, and that's the boogeyman going forward. Because look right here, and fail again and lose it, we're going down to here. There's a little gap right there. But that would be the same scenario as Apple. I just walked you through that scenario as Apple. I would be a buyer. What does that say? QQQ, long capital letters with an exclamation point. Patience. We can't win every battle, but if we don't lose our mind, then we can leave some dry powder in order to make the difference when it actually matters. Right here, I don't have conviction. Down here, I would have conviction. Nick signing out.